Today, we are here to discuss interest rates in the crazy market, and Heyward Cathcart with Guild Mortgage is going to talk about it.
First of all, thanks for having me today. It's great to sit down and take a few minutes to talk about this. So it's no secret, it's been a crazy year, and interest rates have risen from about 3% early this year to about 7% now. So if you take like a $300,000 mortgage, for instance, that adds about $700 to a possible buyer's monthly payment.
Wow.
Significant. So it's changing people's buying decisions. So what can we do to make it a little easier to buy now, instead of waiting for some time in the future when rates are going to come back down? And so there's a couple of things that we're doing. A couple of types of buy downs are what they're called. First, there is what we call a temporary buy down. Temporary buy downs are not new. They've been around for a really long time, but nobody did them for like 30 years. And now they're kind of coming back into style. And what a temporary buy down is a fixed rate loan, and you get a reduced interest rate for an initial period of time, depending on kind of how you set it up. So as an example, if we go back to that 7% market rate, you could have a buy down where you get 2% below the market for the first year, so you get a rate of 5% for your first 12 payments, and then 1% below the market for the second year, so you get a rate of 6% for those 12 payments, and then for the rest of the loan, it goes back to a 7% interest rate. So it's fixed at the beginning. The money that you save in that interest has to be paid by the seller, and then it actually goes into a separate account. And so when the borrower makes their monthly payment every month, they make their reduced payment. We, as the lender, take money out of that account to make that payment whole, and then that's what we send to the actual investor, be it Fannie Mae or Freddie, one of the big entities that buys these mortgage loans. And then you can do them. You can do more buy down. You can do less. There's lots of ways to cut them up. Permanent buy down is a lesser payment impact, but it's the life of the loan. So you could pay like 1% of the loan amount, drop the rate maybe a quarter of a point, sometimes a little more than a quarter, and then that stays low for the life of the loan. You can pay 2 points, drop it a half a point, or a little bit more, and a point is equivalent to 1% of the loan amount. So in that scenario, that $300,000 loan, you pay $3,000 and you save probably $75 a month for the life of the loan. And that can be paid by the buyer, it can be paid by the seller, that can be paid by anybody, there's no restrictions there. The temporary buy down is a great fit for someone who has a house to sell but doesn't want to try to make a contingent offer. So they get the reduced payment while they're still making the mortgage payments on their current house. After they close on the new house, sell the old house, and then when the payment goes back up, it kind of balances out their
Temporary buy down.
Temporary.
Right.
Or somebody that thinks they're going to refinance. This is becoming more and more popular as there's a growing school, I'm kind of in this camp, that thinks that rates are going to come back down in the next, 12 to 24 months, and that most of these 7% loans we're closing now are going to refinance anyway.
Right,
So
because
you
most people refinance how many years, so there's nothing.
Yeah. Well, most people get a new mortgage about every 4 years.
Right. So temporary might be better than permanent, because permanent's a lot more money too, right?
Yeah. So you get a 7% rate, but you get a temporary buy down to 5%, and in a year you refinance if rates come down to 5% naturally, and then you never would have had to pay your 7%. And then permanent buy downs are people it's a more conservative. This is the house I'm going to be in forever. I don't want to take any interest rate risk. I want to know what my payment's going to be, so I'll do the permanent buy down and know where my payment's going to be, and it'll be there forever.
Well, that was great information, Heyward, on temporary buy downs versus permanent buy downs. So any new things coming up on the market to help with buyers in these high interest days?